Good afternoon. It is Monday, November 6th. It's 1:45 p.m. Interesting start to the week. Right now, gold up. Gold's up about $10. It hit that 1280 level. Silver up 38 cents. $17.18 as I speak. You know, it went up 40 cents and went down big. It goes up again. This is all just the paper. This is all just the paper market going back and forth. This is not physical. This is just paper going back and forth. It's hitting that 1280 resistance. The last time it hit it, last week, it came down hard twice off that level. So we got to see what's going to happen here. This is nothing. Once again, unless we break out at 1340, we're just in this range. It's going nowhere. Okay? So these are the type of days everybody gets excited. Woo! No. Nothing. Nothing to see here. Okay? It's the same old, same old. This dog won't hunt. Okay? So stocks are up. Not much. But Dow is up, S&P is up, bonds are up even slightly. That 10-year is down to 2.33. Saw this article on Zero Hedge. Gold spikes above key technical level. No, it's not above that key technical level. No, it's not. Gold spikes above key technical level as U.S. dollar, Japanese yen, Bitcoin tumble. I saw that headline, Bitcoin tumbling. So I looked at the price of Bitcoin, and it was like $7,000 a coin. I said, where's the tumble here? $7,054. This is a tumble? It's over $7,000 a coin. What are they talking about? Tumble. I mean, it's getting very hard to be negative. Okay, it's a hard way to be. When you got to use these clickbait headlines, you know, it's not tumbling. It's hardly tumbling. Anyway, this is what I wanted to talk about today. Not really much going on, but I saw this article. Top 2 signs why gold prices are overvalued. Overvalued. And this is the same company that did a hit piece last week. Okay? And I emailed them and I asked for their gold forecasts for the years 2000 up to the present. Never heard back from them. But here they are again, doubling down and digging their heels in. Even though gold prices are already fairly weak compared to just 2 months ago, this research firm still believes that most indicators point to the yellow metal being overvalued. Capital Economics sees gold retreating first to $1,240 per ounce by end of year 2017. And then falling further down to $1,200. 2 main negative triggers for the precious metal are a more aggressive Fed outlook and a lack of real political risks, geopolitical risks, I should say. A more aggressive Fed outlook. I gotta laugh. Let's be clear. Okay, it doesn't matter what the Fed says. It matters what they do. Okay? It doesn't matter what they say. It doesn't matter what their outlook is. It doesn't matter what their dot plots are. Okay? I don't care if they have an aggressive outlook. All that matters is what they do. Okay? Not what they say. Okay? They say a lot of things. Okay? They speak out of every side of their mouth. That's what they do. Okay? So I don't care about their outlook. Okay? And then they say there's no real geopolitical risks. So what's happening with North Korea is not real? It's not real to them? What's happening with Saudi Arabia? What's happening in the Middle East? What's happening with Russia? None of this is real. This is a hit piece, people, pure and simple. And look for them all. Look for them all as they come out more and more and more, these hit pieces. Okay? No real geopolitical risks. The Fed will hike interest rates one more time in 2017. Okay, let them. By all means, let them. What did they do in December 2015? They hiked rates for the first time in 9 years? What did gold do? It went up. We had this already. We went over this already. Okay? Gold can and has gone up in a rising rate environment. So what are these people talking about? The Fed, this stuff really gets to me, this stuff. This dribble, this nonsense, these hit pieces. Okay? These people are playing checkers. Okay? They're not playing chess. The Fed will hike interest rates one more time in 2017. And 4 times. Didn't we hear this already? Didn't we hear this? 4 times in 2018. That's what they're predicting. Which is more than both markets and the FOMC's own projections imply. All right, so they're even more aggressive than the Fed is even saying, I guess. Said Simona Gambarini, commodities economist at Capital Economics. Okay, Simona. All right. First of all, go back and look at my charts. Go back and look at my video. I showed you a year, what was it, 2004? They raised rates every single time, 12 months, right? 12 times. They raised every practical meeting they had. Quarter of a point. And what did gold do? It went up, okay? So stop this nonsense already, okay? This is simple propaganda from people who are playing checkers, putting out hit pieces, okay? The nomination of Jerome Powell as the next Fed chair does not change that grim outlook for gold. It's a grim outlook for gold, Gambarini added in a report released on Friday. After failing at $11.27 per ounce following U.S. President Donald Trump's election, gold prices have been pushed up this year by elevated geopolitical risks and dovish market expectations for monetary tightening, the economist said. This is ridiculous. Gold managed to soar in 2017, even in light of 2 Fed rate hikes. Oh, there you go. Even in light of 2 Fed rate hikes. So what are you talking about, Miss, what's her name? Simona? And what do you think is going to happen to stocks if the Fed starts raising rates this aggressively? Based on the historical relationship expectations for U.S. rates and the price of gold, the yellow metal still looks overvalued, Gambarini wrote. There has been a breakdown in the relationship between U.S. interest rate expectations and the price of gold since mid-August, which is around the time when tensions between U.S. and North Korea escalated. At the same time, all the main risk indicators, such as the VIX, have actually seen a decline since peaking in August, which means gold will be falling in the coming months. This is such nonsense. This is outright nonsense. Okay, let's see how this all plays out. I want to hold on to this article. Okay, I want to see how this all plays out. Okay, such nonsense. Stop listening to the people that have been getting it wrong. Start listening to the people that have been getting it right. So that's it. Let's see now. Gold's at 1280. Let's see if they monkey hammer it again. Okay, I said this is like Chinese water torture here. Okay, let's see what happens now. We're in this range. We continue to be in this range. I can't wait for December, people. I can't wait for them to finally, once again, raise interest rates, okay? Because last week we got all the news behind us that was supposed to be so terrible for gold, right? The Fed chair was supposed to be so terrible for gold. Well, gold's back at 1280, right where it was, okay? The non-farm payroll report, we were supposed to get gangbusters, right? That was supposed to be terrible for gold, right? Gold's here at 1280, right back where it was before all this news, right? The FOMC meeting, right? Supposed to be terrible for gold. That's behind us. It's the same nonsense all the time. They jawbone it down, they jawbone it down, they jawbone it down, right? Then you get the news, okay, and then gold finally goes back. But they got to take it down first. They got to jawbone it down first in these paper markets, okay? They use the paper markets and the jawboning to get it down. Then the news comes out and it goes right back up, okay? But it's stuck in this range, okay? I said, where's the catalyst? I haven't gotten it. Where is the catalyst for higher gold prices, all right? So, nothing on the agenda really this week, all right? I can't wait to get this December rate hike behind us, okay? That's my goal right now. That's the only thing on my short-term horizon, this December rate hike. Let's get it behind us once and for all, okay? Because this is all the Fed has been doing for how many years? Yeah, we could raise rates, but we won't raise rates. We can if we want to, but we won't. We want to be a little more data dependent, and we could, but we won't. But we can. That's what they do. And the markets buy this over and over and over again. And this woman right here, she's swallowing it hook, line, and sinker. 4 times next year. 4 times. Talk about drinking the Kool-Aid. All right, well, and if they did raise it 4 times, bring it on, I say. Bring it on already, okay? Because the more they raise, okay, the more gold's going to go up because they're behind the curve. And eventually they're going to have to stop raising and then they're going to have to start going the other way. That's what happened when they brought it all the way down to 0, right? They really couldn't go down any lower. They weren't going to get into negative interest rates, right? So now it's slowly going up, slowly, and gold is going up with it because they're behind. And they know every single interest rate is one closer to when they're going to have to stop. So I say bring it on already, okay? I'm salivating at this. Get the December rate hike behind us already. Anyway, people, nice day for a walk out there. Take a walk if you can. Let's see how this all plays out the rest of the week. Let's see if we can see what happens around this 1280 level, okay? Right here. Ciao.